In this video, we are going to show you the Fibonacci tool and liquidity matrix and where to find exact buy and sell trade entries using real live chart examples. We will use the premium and discount areas and the liquidity matrix and exactly find the buy and sell trade locations. So this is where you consider buy liquidity matrix. As a change of character or market structure shift, you can take the next partial profit. After that, in the lower time frame, we can start buying. Set these extra levels in the fifth tool. Okay, so this is another example. Here, with this swing low down here. So since the price come here, we can place a sell entry here. Okay, so this is another example. There's a displacement and break of structure. This is the fifth tool from So what is the use of the fib tool? Number one, you can use it mainly for price to figure out the price retracement levels, meaning where to buy or sell. Also to figure out if the price is in a premium area and if the price is in a discount area. Also to confirm significant swing lows and swing highs. So now we will look into premium and discount areas when the price is bullish. So what that means is when the price is in an uptrend, and when you see a swing high, and if the price is retracing, what you do is you draw the fib tool from this swing low into this swing high. And when the price start retracing, what you are checking is if the price is coming below 50% of the fib. And we call it as the discount area. So which means a cheap price to buy. So traders will buy when the price retraces into the discount area. Okay, so the premium discount areas when the price is bearish. So when the price is in a downtrend, if you see the price starts to retrace, what you do is you draw the fib tool from this swing high into this swing low, and if the price during the retracement goes above 50% of fib, then we consider the price to be in the premium area. So when the price reaches the premium area, traders consider the price to be expensive, and that's where they will start selling. Okay, so now let's see how to set the fib settings for the premium and discount areas. What you do is in trading view, you will take the fib tool and you go to the settings of the fib tool and you just set only these three values. Take the fib tool over here, you just grab the fib retracement tool and you just draw it. When you draw, you may not see these levels. Just click on settings and simply go and type these three values here. That's it, and make sure you put the level like this. Okay, so now let's look at how price actually moves. So the price moves from premium to discount. It allows traders to buy at a discount area. Also, price will move from discount to the premium. Price to retrace into a premium area. That's where we can sell. The price moving from premium to discount, or in an uptrend, or the price moving from a discount into a premium in a downtrend. That is what you call as a pullback. So when you figure out the premium and discount areas, that's what you call as liquidity matrix. Also, when you draw the fib, we call this area as the dealing range. Okay, so now what we are going to look is, we are going to see what are the valid significant swing low points during a pullback in an uptrend. Okay, so in an uptrend, if you compare this and this, you can see this higher low is formed in the discount area, whereas this higher low is not formed in the discount area. So this higher low in an uptrend, we don't consider this as a strong or valid swing low point. But this one we consider as a valid or a strong swing low point. Now this is important because when it comes to change of characters or market structure shifts, we consider only these significant or strong swing points. Okay, so now the price is in an uptrend in this left hand side, and it has formed a, let's say, higher high and a higher low, but this higher low is not in the discount area. So what I'm telling is, now let's say if the price come down and breaks this swing low, when this happens, we don't consider it to be a change of character or market structure shift. However, if this swing low was formed in the discount area, and if that swing low is broken down strongly with a displacement, then we consider this point as a change of character or market structure shift, and then we consider the uptrend to be changed from the uptrend into a downtrend. So once this happens, so after the change of character and the market structure shift, after this, we don't consider it as a pullback now, because it's an uptrend. So usually in uptrend there's a pullback, but now when the price comes down and make a market structure shift, then we don't consider this part as a pullback. Instead of that, we consider it as the change of the trend from up to down. So now it's not a pullback. After that, traders will look into sell entries. In the left hand side, this is not a strong swing point. So we don't consider this as a change of character or market structure shift when this happens. Instead of that, we still consider this price coming down as part of the pullback. What do I mean? So what I mean is, in an uptrend, the price goes up, then makes a pullback. Then the next swing leg, break of structure, going up, then a pullback. Again going up, break of structure, pullback. So we consider it to be the pullback, whereas here we consider it as a change of the trend because of the market structure shift. So what that means is, this price is still in an uptrend and it's just making a pullback. Further, the pullback is coming further down. That's how we look into the market. That is why this significant swing point is very important, and we figure it out with the help of the Fib tool. Okay, so this is a candlestick chart where you can see the price is in uptrend and retraces, and the price has retraced into the discount area and again make a break of structure going up. So here what happens is, when the price start coming down, we consider it as a pullback as long as it don't go below this strong swing point. So if the price comes halfway and go up, we still consider the price to be in an uptrend. However, because this is a strong swing point in the discount area, if the price keep falling down and past this area, then we consider it to be a market structure shift or change of character, and then the price to go into a downtrend. Okay, let's see what's next. So it's the same thing now in a downtrend. So in a downtrend, it makes lower lows and lower highs. The difference is, this lower high is in the discount area, whereas this lower high, it has retraced into the premium area. Now this is considered to be a strong swing point, but this one is not considered as a strong swing point. Why? Because it's in the discount area. So it has to be formed in the premium area. And the same theory applies. Only when this strong swing point is broken up, only then we consider it to be a change of character or market structure shift. So it shows in this diagram. So for example, when you compare left and right, however, this lower high or the swing high is not in the premium, whereas this one, this swing high is in the premium. So for example, if the price violates this and breaks this up, we still consider this to be part of the downtrend and consider it to be part of the pullback. However, because this is a strong swing point, if the price go up and breaks this, then we don't consider, after that we don't consider it as a pullback, we consider it as a change of a trend from the downtrend into a uptrend. So when in the left hand side, when this happens, we are just considering this as a pullback and we still look to sell. However, when this happens, after this happens, we are not looking to sell even though it's a downtrend. Now we consider it to change into uptrend. So we are now looking into buy entries after this happens. So to summarize, if I go back over here, we are in uptrend and we want to buy. The price comes down. It's not a strong swing point, so we still consider it as a pullback, so we still look into buy. But here, this is a strong swing point. the price goes below that and makes a market structure shift or change of character. So until that happens, we were buying, but now we will start to sell. The price has retraced in a downtrend, retraces to the premium, and then makes a break of structure down and goes down. So when the price comes back after this, if the price retraces, we consider it to be a retracement. However, yeah, if it comes halfway and go down, yeah, we will still sell. However, if the price comes all the way up and if it breaks above this strong swing point because it's in the premium area, after that we don't look into sell, we will start look into buy entries. Okay, let's see what's next. Okay, so now let's look where to look for the end of a pullback and its lower time frame confirmation of the market structure shift or change of character during an uptrend. Okay, so here the price is in an uptrend and the red color line is the higher time frame and the blue color line is the lower time frame. So when the higher time frame is in uptrend, what we want to buy, but we need to wait for the pullback. But how do we know when the pullback is over? So for that we look the pullback to be over in the discount area. So if the price comes down all the way to the discount area, we will go to the lower time frame and see if there's a change of character or market structure shift happening in the lower time frame. If that happens, then after that in the lower time frame we can start buying. However, we do this only if this whole thing happens in the discount area. So next slide is the same thing in a downtrend. So now we are in a downtrend. So in a downtrend we need to sell, but when the price is going down we don't sell, we wait for the pullback. Now you can see the higher time frame red color line is in a pullback. Now what you do is you wait till the price come to the premium area. How do you know the premium area? So you draw the fib from this swing high into this swing low, then you will find the premium and discount areas. So you wait for the higher time frame to come into the premium area first. When it comes to the premium area, then you go into the lower time frame to see if there is a change of character or market structure shift seen or happening in the lower time frame. If that happens, after that in the lower time frame you can start selling. However, for you to sell, all what I said should happen in the premium area. If this happens, let's say in the discount area, you don't sell. Same in the earlier, if all this what I said, if that happens in the premium, you don't buy. Okay, let's see what's next. Okay, so now we are going to look into the exact fib pullback retracement levels when the price is bullish. Earlier slides we were using only 3 levels in the fib settings, but now you put multiple levels. For example, 0, 50, 62%, 70, 79 likewise, and minus 50, minus 100. If you look at this example, the price is in uptrend. Now it has made a swing high, it's retracing. So then you draw the fib tool from the swing low to the swing high, and when the price retraces, as we said earlier, we want the price to come into the discount area, that means below 50%. But now we put more levels to precisely identify the levels. So we are waiting for the price to come below 50, further down, at least until up to 62 to 79%. So if the price comes to that level, that's where we consider or we start thinking to buy. And when the price hits that, let's say if we buy in that area, and if the price is going up, now we need to take profits. So the rest of the fib levels you see here are take profit levels. So for example, when the price again comes now up and reach the 0 level, we will take the first take profit. And when the price further, let's say, goes up, we take, let's say, another take partial profit at minus 50, minus 100, minus 150, and minus 200. So this is the same thing in a bearish example. So I will show, see the price is in a downtrend, bearish. So the price comes down and retraces back. So what you do is you draw the fib from the swing high to the swing low, and it's in a downtrend. So we are waiting for the pullback for us to sell. But now we are being more precise. We are telling above 50 it should go further up until up to 62 to 79. If the price touch that area, then only we consider to sell. This is how you set these extra levels in the Fib tool. Okay, so this is in trading view. If I take the Fib tool and let's say if I draw from this swing low into this swing high, and you may not see these levels when you do this. So what you have to do is click on it, go to settings and see add all these levels similar to earlier. The price is going up, it's retracing. Now you can see the price came below 50 and now we are looking to buy, but as we said we buy between Fib 62 to 79. So you can see the price touches that level. So this is where you consider buying. So if you buy, then if the price keeps going up, then you take your first partial take profit here when the price reach Fib 0 level, and if the price keep going up, you can take your next partial profit over here, and then if the price keep going up, you can take the next partial profit at minus 100. Okay, so now let's look into some real live chart examples. Okay, so in this example, we are in a 4-hour chart. So let's say if we draw the Fib from, let's say, this swing low into this swing high, the price has retraced to the 62%. There you can place a buy entry, and then when the price reaches the 0 level, basically you can take your first take profit. Okay, so this is another example. If I draw the Fib tool for this trend leg down, because it's a strong displacement down, here to this swing low down here, the price has come to the Fib 79%. So see, we are looking for the price to come between 62 and 79. So since the price come here, we can place a sell entry here. And when the trade starts working in your direction, you can start taking your first take profit here. Okay, so this is another example where I am in the micro mini Nasdaq index futures hourly chart. When the price is, let's say, in this uptrend area in the 1-hour chart, you can see if I draw the Fib tool, you can see there's a displacement and break of structure. So if I place the Fib tool from here to here, you can see the price retrace in this trend leg, the price retrace into the Fib 62 to 79 area over here. So this is where you can take a buy entry. Okay, so we are again in the 15-minute chart. You can see in this area, the price is in a downtrend. So if you want to sell, you need to wait for the price to reach, make the retracement. There's a displacement here, as you can see, a strong displacement. So if I put the Fib tool from, let's say, here to here, you can see the price did not reach the 62 to 79, see, in this retracement. So there's no sell entry here. So then what you do is, you can see the price is going further down. So then you will look for the next swing low. You will drag the price and you can see again the price in this area retrace, but still the price did not come to the 62 to 79. So then you will wait till the price, you will wait and see if the price comes 62 to 79, and you can see at this point the price came to the 62 level. So you patiently wait until this point, and this is where you will place your sell entry. Okay, so this is how you use the Fib tool to figure out the exact buy and sell locations. So basically what you are doing here is, if you want to sell, you are waiting for the price to retrace into a premium level. If you want to buy, you are waiting for the price to retrace into a discount level. If the price just retraces to the 50%, we don't buy or sell. You have to wait till the price comes to the 62% and 79%. Once the price comes to that level, that's where you either buy or sell depending on the direction of the trend. Okay, let's see what's next. Okay, so make sure to look at the OTE video lesson after this in another video, optimal trade entry, because in this video what we gave is the overall idea of the Fib and just a general idea of where to buy or sell. But now what you need is a complete strategy. That is discussed in the OTE video series after this. So we have come to the end of the section where we discuss the Fib tool, and we will see you in the next video.